Hello, this is Brian Resney, president of Resney Wealth Management. It's question and answer day. Let's talk about the number one question that we seem to be receiving the last 3 or 4 months. We've received it a lot, and I want to say this. You, the investor, need to understand the emotional side of investing really wreaks havoc on your portfolio. The question that keeps coming up again and again with investors is a combination of, when do I sell pending a recession? How do you figure out when the economy is truly slowing down? That is kind of a combination question, but we have received that a lot from TV, radio show listeners and via email in addition. What I will tell you is this. As an investor, think about when you buy something. When you do research on an investment, you buy for certain criteria. When that criteria changes, meaning it's rolling over, that would be a reason to sell. The opposite of why you bought would be the reason you would sell. When we look at the overall economy, we're seeing a growth economy, slow growth, but decent growth. When it's usually time to sell, and usually when you're seeing those signs of recession, is when you have an overheated economy, meaning people are borrowing a lot of money, they're buying things they probably normally cannot afford, hence 2006 and 2007 were a great example of that. We're not seeing signs of that. We're seeing this kind of slow meandering uptrend in the overall U.S. economy, and in addition to other parts of the world. We don't see the big people out there getting big loans, people that are really overspending. In fact, if I look at general consumer debt, we're in good shape. Where we are seeing people that are going and spending money and taking on new debt is really to buy a house, but affordable housing, not crazy housing like we saw again in 2006 and 2007. We like what we see in the U.S. economy. That does not mean we're not going to have some kind of pullback in the overall investment market sometime this year, which we do every year. And it doesn't mean in 3 months or 6 years or somewhere between, you may not hear me say, hey, we're seeing signs of an overheated economy. It's recession time. We're going to get defensive. We're not seeing that currently, but again, it's a fluid situation, and your portfolio needs to be fluid, and you need to get defensive when necessary. The problem that most investors face, they don't have a risk management strategy, and their money is not being properly managed by their Wall Street firm, bank, or the insurance salesperson, because most of these firms actually don't manage your money at all, and they certainly never seem to manage the risk. If you're not a client of our firm, give our office a call, schedule a consultation. If you're having doubts or questioning the advice you're receiving, it's time you called and got proper management of your assets from a real investment management firm. We'd love to talk to you and help you prosper and secure your retirement. Have a safe and profitable day.